The forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it. Not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion.
The price of Bitcoin, the ETF was priced in.
Bitcoin is a free market asset that trades forward-looking.
Bitcoin is common property. It's not a security.
In this interview, ARK Invest CEO Cathie Wood is joined by Peter Diamandis, CEO of the Zero Gravity Corporation, and they sit down to discuss Bitcoin and cryptocurrency adoption. The spot ETFs and upcoming halving are the two hottest narratives at the moment, and the consensus is that the two events occurring simultaneously will result in massive, or as Cathie calls it, super exponential growth. However, Bitcoin's recent price action has been discouraging. The leading cryptocurrency liquidated $780 million in short positions on Friday, and many are saying the ETF and halving are not only priced in, but that the entire run is over. Cathie's insight dispels that point of view. She reveals that the price appreciation that sent Bitcoin to new all-time highs has been entirely driven by retail. She explains in the interview that the main clientele of the ETF is not here yet, and contrary to what prices might suggest, things are only getting started. She also touches on adoption outside the ETFs and how emerging markets are benefiting from Bitcoin. Let's dive in.
Congrats on your ETF. It's done very well. You're number 3 now?
Number 3. You know, this was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet, and those are our primary clients. When that happens, wait until you see.
Explosion. But the institutions coming on, and then governments following. I mean, the ship has sailed.
Yes, it has. And this is not just a technology. It's a new asset class. And beyond that, it's a global monetary system. It is the first global private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. We did something called Bitcoin Brainstorm. We do a Bitcoin Brainstorm monthly, and one of them was the convergence between Bitcoin and AI. And we had, you'll probably know of his developer name, Roastbeef, from the Lightning Network on, and he was talking about how in Africa, already this convergence is redefining division of labor. I mean, the gig economy we understand here in the United States, put that on steroids in terms of micro gig economy in the emerging markets, and you have a whole new kind of economy. So yes, very exciting.
The leading wirehouses like Wells Fargo and Merrill Lynch have all remained adamant against placing Bitcoin on their platforms. Some cite due diligence as the reason, and some are openly against the budding asset class in spite of the regulatory clarity. But there is a finite time before which these entities will be economically mandated to allocate into Bitcoin in a bid to grant their clients equal access. Cathie dives deeper into the issue in the upcoming segments. Sit back as we bring you more clips from the interview.
We can see the hash rate exploding onto the scene, halving coming, and I hate to ask predictions again, but I think I remember your sort of bear case, median case, and best case. Give us some of those numbers as you see them.
Yes, well, we have all kinds of metrics, but when I was at Abundance, the forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time, and we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. There's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric, and it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. Now that is done, at least for the time being, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Wirehouses are the final frontier, and they ultimately will cause the most significant movement of the needle. But even though these entities have been forced to acknowledge Bitcoin's existence, they are still grappling with acknowledging its potential. Cathie has explained that even though some of these wirehouses have allowed their customers to access the ETFs on demand, they are still not providing easy access for their customers. She believes this will inevitably change, and that it will spark the real ETF frenzy. Other experts, like Raoul Pal, have also discussed the issue, and the former Goldman Sachs executive has alluded to the fact that it could take as much as 6 months after approvals for the full institutional impact of the ETFs to be witnessed.
What do you think of as the future of DeFi and the future of banking with regard to this?
Yes, and first let me tell you a little story about Bill. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and, those focused on the Ethereum network, Chris Berniski, he was our first crypto analyst and went off to start Placeholder. He decided, we should have a meetup at our office between the Bitcoin and Ethereum supporters, and we'll provide rules of the road. And Bill was the grown-up in the room, set the tone from the Ethereum side, and we had such a productive talk that I went out and bought Ether right away. I already owned a lot of Bitcoin because it was so convincing that there's a place for both. Yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. And so, yes, we think that decentralized finance, and we do call it now the internet financial system, which is really Chris Berniski coined that. Yes.
I like that because it really talks about the functionality more than this ethereal idea. It is the financial backbone, and it's really dematerialized and democratized access to taking action in the world.
Absolutely. And taking the middlemen out of everything. When we did our digital wallet work, we were saying, okay, let's try to figure out how many steps it takes for a consumer to pay a merchant. And that was 9 steps, including the 2 of them. There are many other middlemen, but these were the most direct steps. And that is a 2 to 4% tax on every purchase in the world if you're using intermediaries, credit cards, and so forth. So just think about that. That tax rate dramatically is going to increase access dramatically.
Cathie has wrapped up the discussion on Bitcoin by exploring the future and further applications of Bitcoin, precisely decentralized finance. The current financial system relies on obfuscated processes built upon cascading trust assumptions that only serve to enrich a few people. Bitcoin and smart contract networks like Ethereum and Solana solve this problem. And Cathie is certain this will be another driver for adoption. What do you think about Pete's and Cathie's insights and bullishness? To see the latest in crypto news, watch this video here.